think that there's a lack of talent in crypto, you can raise lots of money, millions of dollars, but there aren't millions of smart contract engineers to hire or community managers who are interested in crypto and everybody in between. And it's like dog years, right? 1 year in crypto is many years in traditional tech. We tell our founders that you should have at least 18, 24 months of runway and assume you're not going to be able to raise any capital for 2 years or so.
Hello everyone, this is Meina, your crypto friend. Today, I have Yida Gao, the Managing General Partner of Shima Capital, as my guest. Shima Capital is an early-stage crypto investment firm backed by Dragonfly Capital, Digital Currency Group, Tiger Global, and other strategics. Yida graduated from MIT with degrees in mathematics and computer science. He dropped out of Stanford's Graduate School of Business to pursue crypto investing full-time in 2017. He also teaches the crypto finance course at MIT. Let's listen to Yida's stories and his investment strategies. Hi Yida, thank you for joining my podcast today.
Yeah, great to be here. Thank you for the opportunity.
Great. Can you please provide a brief introduction to yourself as well as Shima Capital?
Sure. So my name is Yida Gao. I was born in China in a small town called Shima, close to Taiwan in Fujian province. Moved to the States when I was about 4.5 years old. Grew up in Atlanta. Went to school at MIT, studied math, computer science, econ, and then started my career working on Wall Street. So I was at Morgan Stanley doing M&A banking for a couple of years before moving into venture. So worked at a VC fund called NEA in Menlo Park in Silicon Valley. Started there in 2015, and that's a timing where I got into crypto. Around that time frame where I was focusing a lot of my time in fintech. So part of that was looking into blockchain technologies, but our partners were not really interested, and it was hard for us to custody tokens in 2016, 17. So after a while, I left and started my first crypto fund called Divergence Digital Currency. Fast forward to today, we are deploying capital out of Shima Capital, which was a fund I started last year. DDC was more of an open-ended hedge fund, and Shima Capital is a closed-ended venture fund, which I think is a better structure for investing into early-stage Web3 companies. So we started Shima last year, and we deploy capital across all verticals within crypto. So from infrastructure all the way to gaming and everything between. We primarily focus on being the first institutional checks into rounds. So seed, pre-seed, and investing usually 1 to 2 million, although we can flex down and up. We invested as small as $250,000 into companies, and we are a global team and we invest globally. So I would say maybe 50% of the investments are in the US, 50% are outside. And we have team members all around the world. Most of the folks are in New York, San Francisco, Boston area, but we have folks in Brazil to Dubai and other places.
That's great. Thank you for your introduction to Shima Capital in such details. Then can you tell us more about being an early stage crypto fund? Right. What are the core values that Shima Capital will add to different crypto projects?
Sure. So we mainly focus on the super early stages, right? And what we realized, and one of the reasons we started Shima, is that there's been a bifurcation of institutional capital getting into the space, meaning this, you have funds that have ballooned in size, right, are becoming, multi-billion dollars in size. So it's hard for those funds to really invest into the early stages. And then on the other side of the barbell, right, you have, kind of angels kind of investing into in the projects early on. And there's not a lot of resources and a team to really help founders at the early stages with a lot of different, value adds that they need as an early stage founder. So we break our value adds into, call it 3 to 4 buckets. The first being talent. We think that there's a lack of talent in crypto. You can raise, lots of money, millions of dollars, but there aren't millions of smart contract engineers to hire or community managers who are interested in crypto and everybody in between. So we have an in-house team that helps our portfolio companies hire talent. And then secondly, we think that crypto is very retail driven. So we have an in-house community and marketing team to help amplify narratives around the world. I do think that's super important, especially for a space that is still very young. There's a lot of education that needs to be given across all the verticals. And then thirdly, we help with tech. So we have an in-house tech team that helps with token design, with architectural design, smart contract auditing, things that I think are kind of pivotal for any type of Web3 founder. And then fourthly, because we've been in the space for so long, we have a deep network that we can kind of rely on to help with general business development, helping raise subsequent rounds of financing, cross portfolio support and introductions. So that's kind of how I think about our value adds.
That's great. The reason why I asked that question is because I did hear a lot of great feedback from different project co-founders and founders that Shima Capital has invested in. So I definitely wanted to hear about your philosophy or your thoughts on like how you wanted to help those different co-founders. Then let's go back a little bit about the general crypto space. Why or what inspired you to create a fund specifically for Web3 and crypto? Because obviously as an investor, you have lots of choice, right? There are many different sectors that you can pick from or invest in. Why crypto?
When we were thinking about spinning up a new fund and which categories to invest into, we wanted one that had a lot of room for growth. And being a venture investor for many years, I realized that there is just, if you look at all the tech verticals out there, there are certain ones that require you to have maybe a PhD or you require to have certain skills that you're learning over decades. So those categories, a lot of them in the healthcare space, we wouldn't really be the best position to deploy LP capital into. And then there are other ones that have been around for a while, fintech, consumer, enterprise SaaS, and they've been around for a while, meaning that there is a lot of funds already in the space and a lot of companies to back. So, the competition is super high. So if we were to start from scratch, there's still a lot of competition in the crypto space, but relative to other industries, I think the risk reward and also the upside and, there's so many different types of low hanging fruit investments you can make that need to exist in Web3 that already exist in Web2. We thought that the risk reward made the most sense to invest into crypto. And it's like dog years, right? 1 year in crypto is many years in traditional tech. And we've been in this space for, around 7 years now. So, we have the ability to, leverage our network and our experience investing in the space for so long. So, giving us a disproportionate advantage relative to newer entrants.
Yeah, I totally agree with you. I think connections, networks really means a lot in the crypto space. And if you tap into the crypto space at a very early stage, then inevitably you're going to have a very good advantage over other venture capitals.
Yeah, and I also think that in crypto, like the value add that you provide and the support you provide to founders, it can have a bigger impact than if you're a seed investor in traditional venture. You can really, as a VC in the space, you can really effectuate change in the market cap or the enterprise value of the business more so than traditional venture, just because the space is so early. There's a lot of access, information arbitrage, a lot of these connections and intros that you can make that can really change the course in a positive way for the founders.
With that being said, will you ever be interested in having your own project, crypto project?
So we do incubate, 1 or 2 companies on average a year. So, I think our support and our experience lends itself best to, supporting other founders and not, being in the trenches at one company. But we do, kind of light touch incubation because of the, resources that we have and ability to bring teams together. We obviously hear about a lot of ideas. So, when the right team gets paired with the right idea, then that's usually when the incubation project occurs.
Got it. Now let's talk a little bit about your investment strategies in the crypto space. I think that's also a lot of my audience would like to hear about. So when you look at the investment opportunities in the crypto space, right, what are the key perspectives that you consider?
So the key perspectives that we consider. So we are investing across all of the verticals. So that covers the entire Web3 space. But we're mainly focused on token investments. We think that if you're a Web3 company and you are designing your value accruals and your business models properly to be Web3 native, then it makes sense to have a token. And we like the shorter time to liquidity, higher velocity types of investments that token assets can provide. So we're mainly focused on tokens versus equity. Although we do have many investments where it's considered like a safe plus token warrant. So have the downside protection of having a convertible note that converts to equity, and also the token as the main kind of alpha driver. It's good to have the equity at time, especially if there's a lot of IP and kind of residual value that you can potentially sell the company for if it doesn't go well. But there are, I would say, 5 categories that we're currently focus a lot of our time on. And so those categories are, one would be consumer, mainstream. As the space gets more adoption from mainstream, I think that leads itself to more consumer applications that get created. And within that, you have social media, content ownership, DAOs, decentralized identification, ID. And so that's one big category. Kind of another category that's similar to that is gaming, metaverse. Very consumer focused, and we have made investments historically in this space, and we will continue to do so. I say 25-30% of our companies in our portfolio are in the gaming metaverse. And then number 3 would be kind of composable financial systems, sustainable DeFi as a subcategory, off-chain infra, regenerative finance, refi. So everything that's going on in the kind of the carbon credit space would fall into that. Payments and settlement would be under the composable financial systems category. Fourthly, it would be decentralized infrastructure, so data platforms, blockchain automation, to cross-chain infra and communication. As more and more chains come out, there needs to be we believe in a multi-chain world. And number 5 would be next generation blockchain tech, and that could be new types of L1s, L2s. You're seeing a lot of buzz around Aptos and Sui. DK proofs and security and any type of next gen tech that's getting built for the space.
Great. But if you are asked to pick one, you're gonna bet heavily on, what will be the category out of the 5 that you just mentioned?
I think the ones that if you look at traditional venture, some of the largest companies that get made are consumer companies, right? It's the riskiest, but I think crypto lends itself to being very consumer retail centric, and changing the way that users can interact with their applications. So I think consumer, the first category I mentioned, will be large for us, and and that's the case, but we would be remiss to not mention that, financial systems and composable financial systems, to be specific, which is the third category I mentioned, is kind of like the low-hanging fruit when it comes to investing in crypto. There's massive amounts of volumes, dollars flowing through the traditional financial world, and crypto has done a decent job capturing a small sliver of that, through DeFi summer and all the, the focus now on derivatives and options now in the space.
Yep.
Great, what people are considering sustainable DeFi yields that are sustainable.
Yeah.
But I do think that we're seeing more and more kind of interactions between, TradFi, traditional finance world, with DeFi, and crypto in general, and Web3 in general. So when the on and off ramps get solved, the problems there, and the larger institutions kind of feed more into and buy more into the space, I think that's when magic can be happening. And we've talked to a lot of large institutions in the Web2 world, TradFi world, the Blackstones of the world, that are all now, really focused on how to use, crypto for their own, blockchain tech for their own existing portfolio companies.
Yeah, that's great to hear, because I still remember, I think last year I was attending a pretty big blockchain conference, and then there was this guy from the TradFi industry, and he was like, do you know the total capital cap for the crypto space is like 1/10 of our company? I'm like, yeah, I know that, but there are much more growth, and it's interesting to see those TradFi people, or like Wall Street people, Web2 people, are increasing their investment, or actually shifting their focus into the Web3 industry.
Yes, 100%.
Yeah, so you picked the first category and the third category. But do you mind sharing what category has given you the best outcome, like the investment return so far? Or is it like averaged out?
Yeah, I mean, I think it's still too early to tell for our existing fund. We do have some, because we started the fund last year around May timeframe. We do have some portfolio companies that are considered fund returners, right? Companies that can return your fund, at least 1x. So we do have those, but right now I would say the best investments that I've made in my career have been in more like fundamental infra, right? Some of the layer ones that we all know today, to some of the more blue chip DeFi, companies that today, the infrastructure layer, and I think those are the ones that have withstood the test of time, from the last bull market in 17 to today. The ones that still exist and are have kind of proved their value to a certain extent, have done the best. And I think for the next cycle, it would move more to the consumer layer of companies that do the best, and that's why I mentioned that as the first category that would put our bets in.
I understand. And so we know that starting back in March or February, the crypto market has started to enter the bear market, or crab market, whatever you call it, from a super bull market since last year. Has that market condition change impacted the way that you guys are investing at Shima Capital?
We've definitely slowed down on the pace of investments. We've also kind of have more time to think about the different theses that we want to invest into. We also have been fortunate enough to be able to negotiate better deals and valuations for LPs. So I think investment in this environment is turning into a buyer's market, versus before Q1 it was more of a seller's market, where founders were able to dictate terms. And
Right.
I think it's healthy, right? The valuations aren't bid up very high by the markets, both retail and institutional markets. And, it's better for everybody, right? Because if you raise that too high of a valuation as a founder, it may be good in a short-term success, but you'd be really hurting now if you hired up a team of 100 people with all the capital that you raised at super high valuation, and now you have to fire 50% of your staff.
Right.
So it's a better time now for, I think, both founders and also investors, to invest in this space, assuming you have the dry powder too.
Mm-hmm. Yeah, a lot of the firing are happening across the crypto industry, including those very huge big names. So I guess for those, when you look at those kind of like firing ongoing, if like that there's one company that you invest in that have been doing that, what will be your suggestions?
If it's a company that is going through, the pains of, cutting costs.
Yeah.
Yeah, I mean, we tell all of our founders, and we started telling them this, kind of beginning of Q2, is that you need to, and really after, May or during May, you need to, make sure that you are very cognizant of burn and how many months of runway you have. We tell our founders that you should have at least 18, 24 months of runway, and assume you're not going to be able to raise any capital for, 2 years or so, and operate with that in mind. Obviously, you don't want to slow down on the growth if it's important for the business, but you can slow down on some of the sponsorships and some of the more earnest level employees that you would be hiring, and really focus on making sure you can find product market fit, and you can be more resourceful with the cash that you have. And firing and laying off people is definitely not easy. And so we have a in-house talent and recruiting team that has collectively more than 2 decades of experience with recruiting to walk our founders through those types of difficult conversations that they would have.
Now I'm kind of interested to hear about, like, when you work with different founders, right? What kind of personality or characteristics that really stands out that you will say, oh, this is the kind of founder that I really, really want to invest in?
Yeah, we are really focused on founders when we make underwriting decisions. Some firms focus more on market, others focus on product. We focus mainly on majority on founders, because I think the product can always change and pivot, but the founders typically are staying the same, and they're the ones with the secret sauce and the forecast of the future. So we rely a lot on the founders to guide the company and the ship to the greener pastures, if you will. So when we look at founders, I think some of the qualities and characteristics that stand out to us include a habitual state of cautious optimism. As a founder, you need to have optimism in order to carry you through all the ups and downs of being a early stage founder in Web3. Also having a lot of high energy. This is especially in Web3, right? It's a 24/7 market. You're always on Twitter, Telegram, and you need to ingest and intake information and synthesize that information to actionable, deliverables in a very fast and quick and efficient manner. So if you're not able to move quickly and understand the competition, and the market can turn in a second, so you need to really be able to turn and kind of move with the markets. And so iterating fast is super important, and having that high energy to intake all that information and all that momentum is important. And then I think one thing, especially in this bear market, is founders that have high trustworthy factor, and somebody who can be trusted with not only like the capital, obviously, because it's very, it seems to be like assumed thing, but within crypto, because a lot of the checks and balances that you have for a Web2 company may not exist, right? Boards are, I think, slowly becoming more of a thing where investors are taking board seats, but at the super early stages, in Web2 even, you don't have, even these, checks and balances that you typically would see. And because you're not necessarily dealing with, bank accounts, JP Morgan Chase bank accounts, but wallets, that are harder to track.
Right.
And the checks and balances of maintaining good financial hygiene, security hygiene is important, and all of that comes down to the founders, right? Making sure that you're backing very trustworthy founders who can be good stewards of capital. In all markets, especially in this bear market. Yeah, those are just a couple of the qualities I'd say top of mind for me. But, there's a lot of other, more low-hanging fruit qualities that are, apparently, very apparent that is very valuable, which is having some sort of differentiated insight on the specific market that you're going after. Do you have some sort of go-to-market that's, relatively different and unique relative to all your competitors? Are you trying to create a new market? So I think those are, table stakes that we need to also assess.
Yeah, I do agree with you that I think most of the crypto founders, they have very strong personalities, and they're always like very fast forwarding, going after different processes. But just out of curiosity, let's say a founder, he founded several projects, right? But then for the next project, he wants to anonymously be on the project. How would you react to that?
Yeah, that brings up like a more of a tangential point around the that what I was talking about being kind of trustworthy and all that. I think in crypto, it's very easy to have multiple companies, multiple projects. Where you're anonymous or you're not. And that happens, sometimes where our founders, pitch us on different ideas and they're raising, more capital, with a different token or different, instrument. And, there are very few Elon Musks out there where, the investors would be okay having, one person run multiple companies, because it usually takes 150% of your time to run one company.
Right.
But it's it's sometimes surprising for people outside of the space to know that there are founders that start multiple companies, and I think that is fine if you're able to do well with your first company or your second company in the crypto space. But a lot of times the founders may lose conviction on what they're building, and they just kind of move to something else. So that's not okay. And I think being anonymous is also not preferred for us, because that just leads to inherent misalignment of incentives, right? There's no need to there are big reasons why you would want to stay anonymous that do not align well with investors in maybe your team.
Right. Yeah, I think this kind of phenomenon, or this actually happens a lot in the crypto space, because once people make money off like one project, they want to move on to the next thing, and I do hope this kind of situation gonna be improved over time as the crypto market matures. Now let's dig into a bit about your expectations for the crypto market. When do you think will be a good time for the retail users to enter, or when do you think like we're gonna see exponential or mass adoption for the users for crypto?
Yeah, so I think right now is a good time to focus on reading all the different Medium article tabs that you have open on your Google Chrome browser that you haven't and really just soak in all the information and companies, projects, tech that has been built out and continuously getting built out over the last, call it 12 months or 15, 16 months since the bull market started. And and then focus on that, right? I think right now there seems to be like a kind of bump in prices positively.
Yep.
But I don't think that, taking everything into account, especially the macro markets, that this is, going to be sustainable. I think there's definitely still a leg or two to drop in terms of, prices. And, if we're focused on that, which, we're not necessarily too focused on because we don't run a liquid strategy. We're mainly focused on private and super early private side. We just have to make sure that, we can help our companies, raise capital and go to the next level of their growth. But for liquid investors and, retail investors, I think it's always, if you have a long-term view on crypto and that it will be here, right? Bitcoin is closer to, going, to 100,000 than zero in your eyes, then it's always good to kind of dollar cost average. There are folks, very smart investors I know who just set up, automatic buys, every single week or every single month. I think that takes the psychology piece out of, trying to time the markets out of the equation. And if you have a good view and strong thesis on general trajectory of crypto, then that would be just smart thing to do to dollar cost average. And I think it will take probably another 12 to 18 months, maybe more, for us to really hit the next bull market. A lot of that also depends on what happens in the macro, I think, in the next couple of quarters here.
Got it. With that being said, do you actively trade or do you trade on the secondary market for cryptocurrency?
No, I try not to. We have fairly robust compliance as well, because we are becoming an RIA, registered investment advisor. So there are strong compliance that prevents us from trading. But we don't do too much of that because we more importantly want to focus on not looking at prices every day. Focus on helping and supporting our founders.
Great. I think you pretty much covered most of the perspectives for how you are investing in the crypto space. Now I want to hear more about your educational efforts. But before we start to talk about your course at MIT, I want to hear you talking about your dropout experience, because back in 2017, you dropped out of Stanford Graduate School of Business, right? Why did you do that to pursue full-time investing in crypto? Why do you think it's gonna add more value to your career?
So I went to GSB for a little bit, but I was always working full-time when I was going through GSB. I just realized it was too much to handle to do both full-time. So I dropped out after a quarter. A lot of my classmates probably didn't think that was the best decision to make, only being there for a quarter. But I felt like at that time, 2017, end of 2017, was a good. It was a very busy time. So I needed to focus on the fund. I think that the Stanford ecosystem and just like any top universities around the U.S. Now are really focused on having a blockchain and crypto practice or department or clubs, etc. So we really are focused on tapping into all the universities in a global manner, but first starting with the U.S. Because a lot of smart founders, and I think crypto generally has on average younger founders than in my experience, and so we need to be where the founders are, and if they're in universities, grad school programs, undergrad, then we need to be there in order to find them, support them. So having that GSB experience has been super helpful, and sourcing deals and identify talent also for founders in our portfolio. A lot of my classmates have messaged me over the years since leaving about being curious or wanting to get into the crypto space. So going to school, I think in general is more about the networking and the people you meet than the actual classes. And that's particularly true for business school.
Okay, there are so many dropouts founders in the crypto space. and, but with that being said, you started to teach the blockchain course named Crypto Finance at the beginning of 2022, right? When you are preparing the course content, right, what kind of knowledge do you actually want your students to acquire through when they are taking the course?
So the course that I teach at MIT in the spring is more of a general course for anybody who is interested in, understanding more about crypto. It's primarily for the Sloan, so business school students at MIT, but we have a lot of cross-registers and folks who are in undergrad and other schools. So it's generally a class that I want to have out there on campus to give people a fundamental understanding of what crypto is. And then I break down the class after we have the foundational courses over the first week or two, to really focus on the different categories that we honestly we invest into. So we'll have a class on DeFi, one on NFT gaming, one on consumer, one on all the the L1s and L2s infrastructure class. So I break it down like that. So from the lens of an investor, right? What are the different verticals that you can invest in? The characteristics to look for in founders and also in teams and companies within each vertical. Give examples, right, of companies that have succeeded in each vertical. And I try to wrap the overall course in the last class on what can you do right now that you understand what crypto is, how it works, the tech behind it, what are the verticals that have spawned from this underlying technology. What can you do in it, right? If you want to be an operator, founder, investor, researcher in the space, we go through some of the career paths because again, this is mainly focused for business school students.
So what if one of your students come to you and say, "Oh, Professor Yida, I want to start my own crypto project," then what would you say to them? Well, what kind of support?
Yeah, I mean, it's definitely a good source of deal flow, I would say, for us. And that's happened, in the office hours, we have students come and pitch their ideas. And yeah, I think that's something that we would definitely take seriously and due diligence on the company. So, for business school, I think a lot of the students are looking to get the requisite kind of knowledge and understanding of how to run a business, and so then they would start one and pitch a crypto company to us. It makes a lot of sense.
Great to hear. I will make sure that my audience acknowledge that, and then they will attend your classes too. As like a successful investor, also a very well-connected person within the crypto space, do you have any advice for the young graduates who want to join crypto VC, who want to probably work for you, for example?
Yeah, you can always apply, right? You can use an email. I think we have an ongoing angel list post on investor roles that we have open and other roles at the firm. But in terms of like how to prepare and how do you get to a position where you can get great deliver a good interview, I think it's just being passionate about the space first and foremost, right? There's some people in the space that are in it for the wrong reasons, and so we can kind of see through that very quickly on the first interview, the first 5 minutes. And so understanding the space very well, being passionate helps, and then come up with a couple of ideas, right? Different types of companies, different types of verticals, technologies within crypto that you find interesting or you think could be the next kind of what's around the corner, right? Of what we should be investing into. And so that's like the number one thing, right? That funds care about is if you can, have ideas and source deals that the fund itself otherwise would not be able to see. That's how you valuable at a VC fund. And so that's I think one advice I would give. Of course, we do not expect you to source deals and close deals by yourself when you first start. So that's not the most important thing. But having the ability to, like the founders that we invest into, take in a lot of information and synthesize that into actionable insights, I think that's key. And so critical thinking and being able to write well, being able to produce investment memos that can capture both the merits of the deal, but also be very clear on the risks and all the mitigants for those risks is important. And having not only high IQ but also EQ, right? Being able to interact with people well, because you will be talking to interacting with a lot of people, both founders, other investors, other community members. So having both high IQ and EQ is important for a role.
Crypto. So what's the most frequent question that you're gonna ask during the interview? Or like, what's your favorite one that you would like to ask that candidate?
The favorite question that I like to ask candidates. Oh, that's a good one. I think, it's very broad. I mean, I like sometimes to see what the candidate likes to do outside of work. So, what are some of the top hobbies that you have and why? And, if you could do anything right outside of this career that you're trying to get into, what would you be doing? So getting an understanding of the other side of the people, because at most venture funds, it's very small knit, small group of people, more of a family. So you have to make sure you're a good cultural fit as well for the team. So yes, I like asking that question.
Great. Culture fit is always important for smaller teams. But you also mentioned you're recruiting or expanding Shima Capital internationally. So how does that all work together? How do you recruit when you recruit internationally?
Well, what I mean by that is we are a global, distributed firm. So we're not necessarily looking for somebody who's in, London, for example. We accept people from all over in terms of, applicants. And, we're looking for the best, tier one, candidates out there, and they can be anywhere, right? And crypto is very global, and we invest globally. So it doesn't, you don't need to be in, a certain, location to do the role. And everybody on our team is very active on Telegram, and we're always online 24/7, Twitter, etc. So you don't necessarily have to be in the same office building. Although, there's some investors who love to be in the same place.
Oh, I see. That makes sense. So now I think we hear not only about your backstory, your investment strategy, as well as your educational efforts within the crypto space. Let's wrap up the interview with your favorite question. Please share a fun fact about yourself.
Okay, nice. Let's see here. So I recently moved down to Puerto Rico and in December. So I used to live in very big cities like New York City, San Francisco, Los Angeles. First time kind of living not a big city. So I'm picking up a lot of interesting, water sports that you wouldn't be able to do in other places.
For example?
Like e-foiling is something that I've been doing a lot of. There's a lot of interesting areas, lagoons, etc. If you haven't visited Puerto Rico, definitely suggest you to make a trip. It's one of the few places where you can be on the beach and then drive a car and be in the mountains in a a literal rainforest, on a hike to being in Old San Juan, which is very historic,
Coffee.
all in one day.
Yeah.
So I want to pick up like salsa or something like that.
That's great.
Maybe on the podcast you can ask me about that.
Oh, next podcast, you need to provide a short clip of you dancing salsa.
Yeah. Yes.
Yeah, but
Well,
I've been to Puerto Rico before. I think it's a really nice area, and it's definitely like if you go there once a while, or even at least a year, it will be a nice vacation. So I'm jealous that you're actually living out of there.
everybody, when I go to Starbucks, everybody's super happy and smiling because everybody's on vacation, right? When they come to the Starbucks, so it's nice to have that type of vibe, 24/7.
Great. Is there any final words that you want to share with the audience, Yida?
Yeah, so we're definitely hiring for our fund and also our portfolio companies. So if you're interested in Web3, definitely give us a shout. But thank you for your time. And Meina, thank you for the opportunity.
Yeah, thank you for joining the podcast. Let's say goodbye to our audience. Bye.
All right, bye.